we have to pay taxes while living in this country, right? But to be very frank, we don't like it, right? Because whenever, with whatever business you do, with whatever job you have to pay income taxes, then you have to pay GST, you have to pay capital gain tax, and a lot of taxes, right? So here I am with a strategy which help you to reduce or eliminate certain amount of taxes in your life. Okay, so let's get into the video. So today I am here to talk about tax harvesting, which is a way for you to remove or eliminate capital gain taxes. So basically, you know, when you are into investment, you are paying your, you are making investments in mutual funds, maybe equity linked mutual funds or any other mutual fund. So what happens is you have to pay taxes for the profits that you make from this mutual fund. Basically, there are two types of taxes for capital gains, which is short-term capital gain and long-term capital gain. Short-term capital gain means if at all you have invested in a mutual fund and you have sold the same mutual fund in profits in less than 12 months, what happens is it comes under short-term capital gain. So this short-term capital gain profits, you have to be taxed under the income slab itself. Now there is long-term capital gain. For example, let us talk about equity mutual funds here. If at all you have invested in equity mutual fund and you are selling that after 1 year and you have the profit of it, it is the capital gain or the long-term capital gain. And the tax you have on long-term capital gain is flat 10%. With whatever profits you make on the long-term capital gain, you have to pay 10% as the income tax here. So with the tax harvesting method that we are going to talk about, we are either going to reduce it or going to eliminate it. So stick to the end of the video. Okay, so I'll talk about how tax harvesting works. Before that, I'll tell you what are the conditions for the long-term capital gain taxes. So according to the government, for the long-term capital gain tax, we have exceptions till 1 lakh. That is, if your long-term capital gain is below 1 lakh, then you need not to pay tax. But if your profits go beyond 1 lakh for the long-term capital gain, if your taxes or if your profits goes above 1 lakh, what happens is you would be eligible or you would be forced to pay the long-term capital gain tax. So till 1 lakh, you don't have to pay taxes. So now let us see how the whole system works in such a way that you can harvest the tax and almost reduce or eliminate the tax. So let's get into the screen now. So let us see what is this tax loss harvesting with an assumption or an example. Okay, so let us say it is 1st February and I bought any of the mutual fund for 5 lakh, let us say. So I have bought this mutual fund for 5 lakh. It is 1st February 2020, let us say. Okay. So what happens is, if I keep this mutual fund for over 1 year and if at all I have over 1 lakh of taxes, I'll have to pay taxes, right? So in order to reduce that, what happens is, for example, let us say if the date is 20th January 2021, that is 1 year after, but not exactly 1 year after, let us say the whole investment has gone to 6 lakh rupees. So let us figure out another number. Let us say it goes to 5,90,000 rupees, where you have 90,000 rupees in profits here. But what happens is, if at all you are selling off this, that is exactly on 20 January 2021 or exactly when you have less than 1 lakh rupees of profits, if at all you are selling this mutual fund. Okay, so basically you bought this mutual fund on 1st February 2020. By the time it is reaching 1 lakh threshold for your taxation, by the time it is going above 1 lakh rupees of profits, let us say you are selling it on 20th January 2021. What happens is your profit is 90,000. Since this 90,000 is less than 1 lakh rupees, what happens is you need not to pay taxes for this, because it is below 1 lakh. According to the government, you need to pay taxes, long-term capital gain taxes, only after the profit goes above 1 lakh rupees, right? Now let us say you have to reinvest it in the same mutual fund at the same time. Okay, so let us say on 20th January 2021 itself, you reinvested this 5.9 lakh rupees. Okay, now you have to understand that initially the buy price was 5 lakh and the sell price was 5.9 lakh, but now for the same mutual fund the buy price is 5.9 lakhs. And let us say on 21 January 2021 or maybe 18 January 2022, the next year, if the whole amount goes to 6.5 lakhs, let us say it is going to 6.5 lakhs. So obviously you have 60,000 of profit here. You let us say you sold this mutual fund on 12th January 2022 at 6.5 lakhs. So what happens is your profit is less than 1 lakh rupees, right? So do you have to pay taxes? Obviously no. Since the tax is less than 1 lakh rupees, you need not to pay taxes. So what happens is in this span of 3 years, that is 2020, 2021, 2022, in this span of 3 years, what have you done is this: you have bought your investment as 2020, you sold it at 2021 with less than 1 lakh rupees of profit, and you reinvested again at 2021 the same year, right? And from 2021 by reaching 2022, you sold the mutual fund again and you reinvested again. So what happens is every time when you book profits before 1 lakh rupees, what happens is you need not to pay taxes because your profits comes only less than 1 lakh rupees, because every time you buy, the buy price is updated. So that's a very cool deal. So now let us see, if at all we have been not using this strategy, what was the actual tax that you have to pay. See, the actual buy price is 5 lakh rupees. You see here, right? This was the actual buy price. And what is the current price right now? According to that, this example, the current price is 6.5 lakh. So basically 6.5 lakh rupees minus 5 lakh rupees, which is equal to 1.5 lakh rupees, is the actual capital gain, and you have to pay. How much you would have to pay? Excess of 1 lakh, you have 50,000 here, right? So 50,000 here. For the 10% of 50,000, which is 5,000 rupees in taxes, you will have to pay actually. But here, instead of paying this 5,000 rupees of capital gain tax, so what have you done? You have sold the mutual fund before the threshold of 1 lakh of profit reaches, and what happens is you reinvest it same way. So what happens, your net profit or capital gain tax comes under 1 lakh and you need not to pay taxes, and every time you reinvest it is in the new price, so that gets better and you get another 1 lakh of space for tax exemptions, which is a great strategy for you to understand, I guess. So this is a very interesting strategy that you can use if at all you are an active investor in mutual funds. Basically, in order to have a financially independent life, you have to be investing in mutual funds or stocks or whatever it is. And tax harvesting is a beautiful strategy that you can use. It is very easy. Always make sure that your profits don't go above 1 lakh rupees. Just sell before it and you get the exemption, and you do it every now and then. One important thing that I have to say with this is this: while you book your profits less than 1 lakh rupees for the purpose of tax harvesting, if at all you are not reinvesting again, this game is going to be failing miserably. So don't do that. So what you have to do is that you have to make sure that you reinvest every time in order to get the benefits of compounding and benefits of investing long term in this mutual fund, because you need not to be missing out the huge opportunity of long term investments and compounding for this tax harvesting, 5,000 rupees of tax, right? So you have to sell it and you have to reinvest it all together in a very short span of time, I would say, and all together in a single sitting. So make sure that you keep that in your mind as well. And I hope this video has helped you in one way or the another. This will be helping you in thousands in taxes if at all you understand this better. And let me tell you this, if at all you have got some good value from this video, make sure you subscribe, because we have been putting a lot of effort to make this kind of videos. And also one more thing, if at all you have any doubts regarding tax harvesting, make sure you ask in the comment section. So what I will do is this, I'll just give replies to it depending upon the questions, and I'll try to answer every one of your questions as well. So thank you, Ken signing off.